The Crypto Fear and Greed Index is a method to determine the overall market sentiment within the cryptocurrency space. This index is determined through a number of factors, including market volatility, market momentum/volume, social media sentiment, Bitcoin dominance, and current market trends. Before starting, don't forget to like and subscribe to our channel for more future updates. So, let's start. The market data is collated into a single index, aptly called the Fear and Greed Index, consisting of a range from 0 to 100. The lowest number, 0 being the greatest level of fear, and 100 representing the highest level of greed. Why measure fear and greed in the market? The cryptocurrency market is highly volatile, and it can be said that it is also highly emotional. The two opposing emotions within the market are fear and greed. Investors and traders tend to be increasingly greedy when the market is rising, FOMO. When the market is falling, fear sets in. This index is intended to indicate the current market sentiment for the cryptocurrency market. The Fear and Greed Index makes two simple assumptions. Number 1. Extreme fear. It can be an indication of a buying opportunity. Number 2. Extreme greed can be an indication of an upcoming market correction. The current sentiment of the Bitcoin market is determined by crunching the numbers on a simple scale of 0 to 100. Near 0 means extreme fear, while near 100 refers to extreme greed. Data sources. The Crypto Fear and Greed Index comes from alternative.me, and the team that has generated this index uses primarily 5 different variables to determine the Fear and Greed Index. This Fear and Greed Index relates primarily to the market sentiment for Bitcoin, but since Bitcoin continues to hold market dominance, it can also be used as a reflection of the cryptocurrency market as a whole. Volatility, till 25% of calculation. Market volatility is an important indicator and represents up to 25% of the weight used to this calculation. Market volatility is compared with the last 30 and 90-day historical values to determine this value. The increase in volatility is an indication of a fearful market. Market momentum by volume, till 25% of calculation. The market volume and momentum are also taken into account for this calculation, using the last 30 90th days as a comparison. Using these historic values, the market momentum is determined. Increased buying volume moves the needle closer to the greedy/bullish indication, while decreased volume indicates the opposite. Social media, till 15% of calculation. Social media and the positive or negative posts with respect to the market can offer an important indication of the market sentiment. The market sentiment is largely collected from Twitter using hashtags for each of the top cryptocurrencies traded. Dominance, till 10% of calculation. Bitcoin is the dominant cryptocurrency, and as a result, where Bitcoin goes, the market follows. The dominance of a coin is determined by its market capitalization as a percentage of the whole cryptocurrency market. A rise in Bitcoin dominance can be an indication of fear, and a decrease in Bitcoin dominance, buying more altcoins, can be a reflection of a more speculative and optimistic outlook on the market. Trends, till 10% of calculation. Google Trends data is pulled for popular Bitcoin-related search queries. The results of these queries are used to determine the trends variable in the calculation. How is the Crypto Fear and Greed Index derived? The Crypto Fear and Greed Index is loosely based on CNN Business's website, which has its own Fear and Greed Index, pertaining specifically to the stock market. The Fear and Greed Index was originally developed by CNN Business to measure the two primary emotions which drive and influence investors, fear and greed. Their index is measured in daily, weekly, monthly, and yearly timeframes, and can be used to determine if the stock market is fairly priced. According to CNN Business, they use 7 indicators to determine their index, specifically market momentum, market volatility, safe haven demand, junk bond demand, put and call options, and stock price breadth and stock price strength. When to invest in crypto? The Crypto Fear and Greed Index is a tool that attempts to gauge the market sentiment of the cryptocurrency market based on a variety of indicators. It ranges from 0 to 100, with lower values indicating extreme fear and higher values indicating extreme greed. However, it's important to note that market sentiment indicators like this should be used as one of many tools to inform your investment decisions, rather than as the sole basis for making investment choices. Here's a general guideline for using the Crypto Fear and Greed Index in your investment decision-making process. Extreme fear, from 0 to 20, indicates that the market sentiment is extremely negative and fearful. This could be a potential buying opportunity for long-term investors who believe in the fundamentals of certain cryptocurrencies. However, it's essential to conduct thorough research and consider other factors before making investment decisions. Fear, from 21 to 40, suggests that there is still a considerable amount of fear in the market. Investors might consider adding to their positions if they believe that the market sentiment is overly pessimistic. Again, research and analysis of individual cryptocurrencies are crucial. Neutral, from 41 to 60, represents a balanced sentiment in the market. Investors might consider a cautious approach during this phase, waiting for stronger signals before making significant moves. Greed, from 61 to 80, indicates that the market sentiment is becoming greedy and overly optimistic. It might be a time to take some profits off the table, especially if you have achieved your investment goals or if you're concerned about a potential correction. Extreme greed, from 81 to 100, suggests that the market sentiment is extremely positive and greedy. This could be a sign that a market correction or a period of consolidation might be imminent. Long-term investors might consider waiting for a more balanced sentiment before making new investments. Remember that the Crypto Fear and Greed Index is just one tool among many that you should use for your investment decisions. It's important to conduct thorough research into the specific cryptocurrencies you're interested in. Consider their fundamentals, technological developments, market trends, and overall market conditions. Additionally, diversification and risk management should always be part of your investment strategy to minimize potential losses. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comments section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.